Welcome to Ask the Expert, an award-winning daily series from 8:30 to 9 a.m. to help small businesses. If you have any questions, please ask them in the comments of the live feed. And if you need any more advice, please do join the official Intuit QuickBooks SME community group on Facebook, where there are accountants and business experts to help on hand 24/7. Thank you so much to everyone for joining me again this morning. My name is Eriona. I'm the Managing Director of Majors Accounts & Co, which is a small family-run accountancy practice based in South East London. And I'm also a regular host now on Ask the Expert. So I want to say thank you again for joining me. And for those joining me for the first time, welcome. A little bit about me. I am a chartered certified accountant with the ACCA. I'm also a member of the SME Global Forum and also the the ACCA Accountants Network panel. I'm also part of the QuickBooks Accountants Council, and I have started working in practice from a very young age. So during the time of working and studying, I managed to couple the experience with the theory in order to really understand exactly how our clients' businesses function, and how they work, their pain points, trying to investigate ways of providing solutions for those pain points, and seeing how they can grow or become more profitable, or whatever their goal was, to try and find ways to help them out with that. Obviously, the compliance side of the accounting and taxation is our bread and butter, but we really try to go above and beyond that to really work with the business owner. So who are Majors Accounts? As I mentioned, we're a small family-run practice. We support businesses in the SME sector, so generally owner-managed businesses or self-employed individuals. So we're also moving into the medium to larger sector at the moment as well, but some of our kind of clients, our biggest industries that we deal with are the construction industry. We've seen pretty much every kind of business within the construction industry, but also we have a lot of hospitality businesses such as restaurants, pubs, bars, salons, hairdressers. These are just to name a few, but over the years that we have been trading as a business, we've really seen every kind of business, including utilities and financial services, IT, and the list really goes on. So since becoming Managing Director of Majors Accounts, I spearheaded a digitalisation strategy. The idea of this strategy was to become a paperless office, and proud to say that we now are. We use technology in all areas of our business, and if there are any that we don't at the moment, we're constantly looking for ways of adopting technology to try and become more efficient and really provide a difference for not just our work, but for our clients' businesses too. We are a QuickBooks only practice, so all of the apps that we use all feed into QuickBooks Online, and it allows for us to work on the same data set with our clients. So at any point, we have the ability of allowing our client to get as involved as they want to in their accounts, but at least we're both able to see the exact same information, and if there is anything to be queried, it's quite simple, easy, and very fast to do. So as I mentioned, now everything is done using technology within our firm, and it's not just a great experience for our staff who are using the cutting edge technology, but also for our clients, because they are now equipped with a lot more information than they ever were before, and the information we're providing is in real time. It's not 9 months after the year end, by which point the information would be redundant. And they also don't need to come to the office now, which is very convenient and was, I'd say, a lifesaver for us in the last year and a half, where we were able to keep going and really help our clients more than ever before. And there's that time saving, and it allows for our global reach soon, because we are already national. We've got clients all over the UK at the moment. So the idea of this strategy was to bring the client-accountant relationship closer, and as we are a family-run practice. We want to try and advocate the culture that we have within our practice and with our team to our clients as well, to give a more personalised service. And coupled with the years of experience that we've built up, it really provides or gives us the opportunity to be a lot closer with our clients and act as their virtual finance director, but without the price tag that usually comes with that title, that a lot of small businesses are unable to afford. So during this time, the changes that we've made are quite big for our industry. We were nominated for quite a few awards as a business by the British Accountancy Awards. We were featured in the Parliamentary Review, and myself, I've also been nominated for quite a few awards, for example, by Women in Accounting and Finance Awards and Top 50 Women in Accounting globally. But enough about us. Today what I really want to speak to you all about is the importance of understanding your business financial data. What I've seen with business owners is they get generally really bogged down with the day-to-day running, and they are unable to have a complete understanding of how the business is doing in terms of financial aspects as well, and not utilizing the information that can be obtained from information that your accountant can provide, such as financial statements, to help make better decisions. And I think, if anything, the last year has proven how important it is to understand how your business is doing, how, if there are unforeseen events like global pandemic. Now, that's not something that will happen regularly, but there are many different things that could come your way in business. It's normal. We're always faced with challenges every single day, and making sure whether you're equipped to deal with those challenges is so important. And again, as I mentioned, this last year showed us how many businesses were able to stay on their feet and keep going, or just about survive. For now, as we're out and trying to get back to normality, they can build up again. But there are those businesses that unfortunately were not prepared, and generally 9 times out of 10 it's because they weren't really keeping a close enough eye on how the business is doing financially in order to help keep it going. So there are many metrics to ensure that you can determine the financial health of your business, which is a vital business skill, and it's using the data to make short and long-term goals on a few levels. So on a strategic level, it really helps to get a clear picture of how the business is doing, help make more informed decisions, and help to steer your business in the right direction once you have that bird's eye view of what's going on. And it helps to also determine where your resources need to be allocated, where is the most important area for your resources to go. And also, if you're seeking finance or potential investors in the future, then you need to really ensure that your figures are airtight and you're able to prove that your business is worthy of finance or potential investors. But then on a more tactical level, it helps to better direct your team, which is really relevant at the moment, especially with furlough ending next month as well. So understanding whether you have enough money in order to keep your staff on, whether you need to take more staff on, and what is out there to also help you take more staff on. There's training involved, but also making sure that you have the ability to pay your staff. But it also provides better information on projects and individual performance of those projects. Sometimes we get bogged down in the overall picture, or vice versa, but getting a better understanding of the numbers, whether it is on a project basis or as a business as a whole, is really important to identify maybe which projects should be made redundant because you're not actually earning as much as you should, or which projects are doing really well and you might need to reinvest more to grow those projects. So as I mentioned, there are many metrics to measure performance, but what I would say is one of the simplest is through the financial statements, which are available to you quite readily. Speaking to your accountant, and depending how you've set things up with them, there are apps now which are able to give you reporting in real time. So you don't have to wait many months. You could kind of look into your financial information weekly, well, daily, weekly, monthly, quarterly, whatever you want in order to understand how your business is doing. So today I'm going to go through 3 elements that I would suggest looking into, and which kind of areas you can look into and how they will help you. So I'll start off with the statement of financial position. So this is also known traditionally as the balance sheet, but it provides information on assets, liabilities, both long and short term, and shareholders' equity. So a company's financial health can be analysed by finding things such as how much debt the company has relative to equity, how liquid the business is in the short term, so less than 1 year, what percentage of assets are tangible, and what percentage comes from financial transactions, how long it takes to receive outstanding payments from customers, so your debtors, and how long it takes for you to repay suppliers, whether you've got anything set up in terms of credit. If you haven't, that's one way of highlighting, well, maybe you're able to speak to your suppliers and extend the credit term without having to get a loan, which many suppliers are happy to do, but a lot of businesses feel that they can't ask their suppliers questions like this. So that's one area you can look into. You can also look at how long it takes to sell inventory that the business keeps on hand. So this is just one area, again, which you can do using technology and also with the help of your accountant. The second one I would look into is the income statement. The income statement shows a company's financial position and performance over a period by looking at revenue, expenses, and profits earned. So one way that you could look into this is how much revenue is growing over a certain accounting period. Look at the gross profit margin for goods sold, whether it's high enough or not. Then you can identify whether there are areas you need to look into, such as reducing your expenses in order to get a higher profit margin, or possibly looking at different like transport costs for particular products and so on. What percentage of revenue results in net profit are after all expenses, and if the business can cover its interest repayments on debt, and how much the business repays to shareholders versus how much it reinvests. So a lot of people are in business, especially owner-managed businesses, and you expect to make a certain amount of money, but if you get bogged down in the daily just running of the company, trying to keep it alive, I guess at the beginning when you start up, then you can lose sight of how much do you want to earn from this business. Why did you end up starting your own business? Was it to earn more money? Was it to be able to have more flexibility in terms of free time? Although we do know generally starting your own business, a lot of people think that going into it you will get more time to yourself, but you end up working a lot more. But these are all things that you can try and look at the bigger picture and see whether you're actually matching those goals that you had with the performance of the company. And the last and most important one is the cash flow statement. So the cash flow statement, I would say, is one of the most important documents used to analyze the company's finances, as it provides key insight into the generation and use of cash. You may have heard of cash is king. It is in a business, and not many people, or not enough people, look into this as much as they should. It will help you, it will show you the liquidity situation of the company's sources of cash, the free cash flow from the company that it generates to further invest in assets or operations, and whether overall cash has increased or decreased as well. A lot of people kind of go bust. There are many research papers out there which show that a lot of businesses go bust at the beginning because they don't have enough cash and they haven't focused on that element. So this is one of the most important things that you really need to be focusing on. So the idea of today is turn insights into actions. By keeping a close eye on these, it will ensure that you minimize chances for unforeseen events, and it equips you with the knowledge and skills to make a clear plan and strategy which complements your business goals. So all of this can really easily, especially nowadays with the technology out there, really easily be looked into, and it's information that you could have on your phone even. That's how accessible it is. So if you haven't already, please do find a way of setting this up with your accountant so you're not blindsided by any challenges in the future, or at least give yourself the best opportunity in business. So I see we've got questions coming in now. We've got a question from Josie on Twitter who says, I've still got a handful of staff on furlough, but I'm slowly bringing some back, but not all. Is there anything I need to be aware of before I start implementing this? I would say that's probably the best way of bringing your staff back, especially as you still have that ability to have the government help with the furlough scheme whilst you are able to bring some staff back. I would bring them back on a part-time basis or on a shift basis, get them back into the groove of working. So one thing that we can forget is that some people have not worked for the last almost 18 months or coming up to that. So it's going to be quite difficult for them to get back into the groove of working, get back into, it's almost going to be like retraining, remembering how they used to do things and get back up to speed and being as efficient as possible. So definitely bringing them back on a shift basis to get them all used to what it's like to work again. I think it's the best way of bringing them back. Don't forget though, in September, the furlough scheme will be, at the end of September, the furlough scheme will be stopping. So you're going to have to make a decision on whether your business is able to afford to keep your staff on after this point. And you're going to have to start thinking about that now in case there are any redundancies. There are procedures and processes that you need to go through before you're able to let your staff go. But if you need, by doing what you're doing at the moment, I think it's the best way to give yourself the best possible chance, and your staff, and hopefully, until the end of September, your business will get back up to levels that hopefully you were seeing or close to before the pandemic. So you'll hopefully be able to keep them on. We have a question from Andrew from Instagram who says, I need a van sporadically for my new business. Would it be more cost effective to buy one or to lease one? And what can I claim money back on with regards to the van? Okay, so in terms of buying or leasing, you're saying you need it sporadically, so you're not needing it all the time. If you're just starting up, and to reduce your costs, what I would do personally is I would possibly rent one. And as you need it more and more, then I would look at different options, whether it's buying or leasing. Whether it's buying or leasing, both, seeing as it's a van, it's clearly a vehicle that is needed for business, then all costs relating to that are claimable for tax as an expense. So there's no worries there. But the only thing I would think of is cash flow for yourself. If you don't need it as often, is it worth paying for something and always having it there? Even if you're not using it, you're still paying for it? Or would it be worth renting it for now? And as you see that you are needing it more regularly, then look into options of buying or leasing. With buying or leasing, there are different benefits to either. Some leasing agreements or options out there allow you to kind of upgrade your vehicle regularly, and it can be slightly cheaper on the monthly payments, but obviously that vehicle is never yours. Whereas with buying, it's yours and you can get finance on it. Some businesses I'm seeing now, because they want to generate income, they're providing interest-free rates as well, believe it or not, on finance for vehicles. So, it may be worth buying it and spreading out the cost over a number of years, and you know that it's yours at the end of the day, and you won't have any further expenses in the future. So there are a few things that all of them are claimable for tax. Just make sure that they're in, if you're a limited company, the vehicle insurance and any other finance agreements or anything like that need to be in the company's name, not your name. Or obviously if you're self-employed, then it's fine if everything is in your name. Just make sure either way, however you're trading, the vehicle needs to belong to the business that you're working with. We have a question from Patrick from Facebook Messenger, who says, I'm trying to figure out the best way to pay myself. I own a limited company, sole director. The company is, my apologies, I lost that for a second. The company is because I need liability insurance in my line of work. My annual turnover is small, 18 to 28,000. What is the easiest way to do the salary and NI, and how far can I backdate it? Okay, when it comes to backdating, I wouldn't recommend it. If you're going to make any changes, I would go forward from now on. Seeing as you're a sole director, I would put your salary on the basic NI threshold, not go any higher than that, just because if you have no other employees that are above their NI threshold, then you won't be able to claim the employer's allowance for NI from HMRC. So there's no point really of making your salary on the full personal allowance, which is 12,500, and then you take the rest out, whatever profits are left after any expenses that you have as a business, as dividends. And don't forget, obviously the first £2,000 are tax-free as well. So and then anything above that you will take out at 7.5%. That's the best way. Obviously if you take on any staff in the future that are above the threshold, then I would increase your salary to 12.5 and just change the shift between pay and dividends there. But in terms of backdating, I would say please don't. It'll raise questions with HMRC, and if you haven't been paying yourself that exact amount, depending on the inspector, they could not allow it and say, well, you weren't paying yourself that much, so I'm not going to allow you to backdate it. There are ways to get around it, and that's where you have an accountant present in the meeting if you ever, this is in case of investigations or anything like that. But to be on the safe side, I wouldn't backdate, because you should have been declaring this on payroll on a monthly basis. We have a question from Shia on Twitter, who says, thanks to the unlocking of restrictions, my business has actually seen a sudden increase in income. Amazing. Do you have any advice on what we could be doing with this money? So there are a few things. Obviously, some keep aside in case it doesn't look like we're going into another lockdown, but in case we do, have some money set aside just in case. One of the things I would say is, as I was talking about earlier, looking at the information and financial information in your business, having a look at areas where you could possibly invest in your business to generate even more income. There are ways that you could possibly grow your business by maybe spending some more on marketing, whether it's online, or developing an online revenue stream, selling online if you don't already do so, or vice versa. Having a physical store somewhere maybe as well, as more people are going out as well. So have a look at what I would do is having a look at how you can add different revenue streams. If you're selling products, whether there are any other products that you can develop or add to your business, or services, if there are anything else that you can do in terms of providing more services. But marketing at this time as well is pretty big to help businesses to keep generating as much income. So there are a few ways in order to spend this money. But I'd do a mixture, keep some for just in case, and then use your financial information and data in order to look into what you can do to grow or become more profitable. We have a question from Kirsten on Instagram, who says, if you work from home, is it true that you can claim 10% of household bills that is used by the business? Does this also include mortgage payments? If it is true, how do you log this? Okay, when it comes to expenses from working from home, I am quite wary of how to do this, and I'm quite strict with my clients, because the legislation and the guidance is quite strict. There are two ways that I recommend my clients. One is obviously using the flat rate that HMRC provide, which they have increased since the pandemic to £6 a week, but we know £6 a week doesn't really cover much at all. That's, I guess, for someone who's not working as much and doesn't have a dedicated office in their business, in their house, or a dedicated space just for their business in their house. I guess that would be the easiest way, so there are no questions from HMRC. However, for those who work, pretty much from home, their registered business address is from home, and they don't have any other space anywhere else, and they're basically doing everything from a space in their house, then what I would do is have a look at the area that you occupy in your property that is dedicated only to your business. Have a look at what that area is in relation to the rest of your house, so the square footage, take a percentage, and then using that percentage, take a percentage of all other costs as well. The one thing to look out for when you're looking at if you're taking on mortgage payments, because again, that can be taken as well. You might, if you own your property, if you were to ever sell it in the future, then you should be technically allowing in the capital gains tax calculation for an element that was not your principal private residence as a result, because you were working from your home, so it wasn't only just for living. So you will be liable to possible capital gains tax, and generally with the increase in prices with the houses that we see, they're quite substantial, and the amount of tax you'd have to pay on that is 18 or 28%, and on quite a large amount you have to determine whether it's actually worth you taking that percentage of cost on your rent or not, whereas in the long term you may actually end up paying way more than you're claiming back in terms of as an expense for tax. So definitely something to think about and discuss with your accountant if you own your property. If you're renting, there's no issue there. You don't own the property, so you won't have any other consequences when it comes to tax being paid in the future. So a few options there. I wouldn't say it's at 10%. It depends really on the space that you occupy. One thing that I've noticed that HMRC also look into is if you have a dedicated office space in your home, then they will say the only things that need to be in that office are things that help you in your business. So that would be, for example, a desk, a chair. You can't have a sofa or anything like that where it can double up as a space for you to chill out and relax apart from working. So definitely something to think about, and again, speak to your accountant on the specific details on what you're doing from home. Unfortunately, I can only take one last question, and that's from Lucy on Facebook Messenger, who says, I run a hair salon and we've actually been booked up for months now, people catching up on haircuts. I know the feeling, I need to as well. That said, there's a limit to how many we can book and how much turnover it produces. We still need to recover from lockdown. What can we do to increase our income? This is quite difficult. I've seen certain salons actually having longer hours in order to kind of help that out. And one way of doing that is actually having your staff on a shift basis. Let's say, for example, you have 5 staff usually, but you can't have all 5 in and clients all in one space because you might be worried about social distancing, or your clients might be worrying about that too. Then having longer hours and having your staff on shift basis then allows you to generate higher turnover until people are more comfortable with a lot of people being in a smaller space at one time. That's one of the ways that I have seen businesses that I work with help to generate more income and try to get back to where they were previously. So thank you all for tuning in this morning. If you want to get in touch with myself, please contact me via Majors Accounts website at majorsaccounts.com. We have a live chat feature on there, but we also have a news section where we put up relevant articles and any information or news coming up from the government which may be of use to you or your business. We also have an app which you can download from our website, and again, providing you with the latest information, regular information, but it also has great calculators on there if you want to find out, for example, how much it would cost to take on a staff member and so on. But there are so many within that app. Now, coming up on Ask the Expert tomorrow is Nana Parry, who is the founder of Tectonic, which is a boutique firm that helps businesses understand their customers. Tune in to find out how to win early stage investment for your business. A reminder that if you need any more advice, please do join the official Intuit QuickBooks SMB community group on Facebook, where there are accountants and business experts on hand 24/7. I've really enjoyed answering your questions this morning, and I wish you all a great rest of the day and rest of the week.